Hello traders, the title of the video is Eldorado Gold Stock Proprietary Gold Stock Trader uses proprietary equilibrium price level. We're going to use what are called the proprietary equilibrium price levels. Those are my own proprietary trading tools that I want to share with traders because I'm looking at this stock. It's a gold stock, Eldorado Gold Corporation, belonging to the basic material sector, gold. All right, I'm on a monthly chart. The EPIC is EGO, Eco Golf Oscar. All right. So something very interesting is happening here. Is that there's one way that I use this proprietary trading tool. That sometimes this is a very interesting scenario. That's why I'm analyzing this stock. You see a financial is where you go out from point A to point B. All right. Now the price will go back down. Sometimes for one reason, it become very bearish, and then everybody sold it, and you go below the starting point. This is what's happening here. It went below the starting point. That's it. This is very interesting. So we want to see the reaction. So this was the beginning of that trend. So now it's testing the base. This was something that the price will do very often. We try to go below it and see what will happen. All right. You see sometimes this was they did it here. See, there was this high here. Instead of the price pulling back and retesting nicely, you see all this tail here. Right? And then just continue to go up. They want to retest below it. And then if you survive that and come back up, it's like you are learning to swim and your trainer push you to the deepest end and see how you will feel, how you can cope. That's it. That's what they are trying to. So if we see the price go, trend starting, especially the beginning of a trend, that's what I'm saying now. It's one way to use this strategy. Beginning of trend price went up, and then for many years are going down until it went back below the starting point of the trend. The first equilibrium price level that we see after that are very, very interesting. That's all. Interesting. Which means we are interested in that stock. We want to find out, fundamentally speaking, perform Google ACID tests, do our due diligence, talking about buy and hold, talking about the position trading, all right? Looking into the future, is it looking brighter? Talking about the S&P 500. This is a gold producer. So S&P 500, fourth wave, fifth wave. Okay, so we will say that medium term to long term, gold will become bullish at one point when the S&P 500 has finally completed the fifth wave and the correction has started. So there will be a rush for gold again. But before that, we need to start digging into the gold producer, the gold stock. That's what I'm doing here. So you'll notice that recently I've been going to gold stock quite often, and I will be posting more videos about gold stocks at the Pro Traders YouTube channel. That's where I'm going to be posting every stock that is dealing with gold, because the future is golden. So when we see that price went up, completed the trend, and now below the starting point of the trend, very, very important. The first equilibrium price level that we see become very interesting, and that stock become very interesting to us. We must perform fundamental analysis, check the news, everything, the sector, everything. Now, then we go back to the technical trading, and then we use our technical trading. For this stock, all right, traders that are interested in this stock must perform Google Assisted, do their own fundamental analysis before applying the strategy. So now we have those two equilibrium price level. The long-term equilibrium price level for Eldorado Gold Corporation is $5.49. That's the pink line on the chart. The short-term equilibrium price level for Eldorado Gold is at $4.08. So now we have it, okay? So you say, what can I do with that? We look for trading setup on near that key level. And you say, Joe, what should I do after the price run away from those trend line, those key level? It's a very, very interesting question. I answered a similar question when I was talking about smart media line. So you have multiple smart media line, Okay, if you don't know what is a smart media line, go to www.dayprotrader.com. Okay, click on Market Watch web page. Okay, Market Watch, and then you can read about smart media line and the dynamic smart media line and the 6 critical price level. Okay, this is again talking about smart media line and 6 critical price level. Again, talking about my own proprietary trading tool, but I did reveal to traders everything that they need to know about the dynamic trend line, okay, 6 critical price level, how to calculate the smart media line. But when it comes to the short term and the long term equilibrium price level, I can share with TST traders, okay, if they ask me what is the short term and long term equilibrium price level for this stock, if I have the chart for that stock, I'll tell them, but I cannot tell them the formula. Now, so if you ask the question, what should we do if you start running away, as I did with the smart media line, just measure the distance between the two. So if you have, you remember, it's a channel. So those two lines form a channel. You see, this is it. You go into the mode, anytime you see two lines, so price from two trend line form an angle, we can project an angle, we can project a channel. Just project it down. So you see, I measure the distance. Here it is, you project it up. If you start running away from it, that's what you do. By doing so, you are creating new equilibrium price level. They are not intrinsically equilibrium price level. They are a copy, or they are a copy of the original. So the copy cannot replace the original, but we can use the copy to do other things. So you want to apply for a loan, they ask you for a copy of your pay slip, all right? So they know that you have the original, but they say, okay, can you first ask the copy of your latest pay slip? Though they know the original is there, but they're asking for a copy. So the same thing we do in trading, though we cannot replace the original equilibrium price level with anything else. As the price is running away from it, nothing in the world should stop us to project or to copy them, as we are doing now, into the future to determine, okay, either important key level that are ahead of us. If the price was going down, we'll be projecting that measuring stick down where the price is going. Okay, so that will be very useful to us. Okay, and we know we can leave those lines on our chart, and all we are looking for: breaks the ball, retest, common center line is broken, the candlestick bar is closed, use TSTW trading system, or implement a different time frame trading method. Is that something that you consider to use? So this is it. So for this talk, as I said to you, the equilibrium price level is a tool that I have created that is in fact helping me a lot, because the value that we are determining has something to do with the fundamental. Though I'm using technical data to determine the short-term and the long-term equilibrium price level, but it worked beautifully. So you say, George, show me something else. You want me to show you something else? Okay, hold on, please. I'll be back in a minute. Look at this. Look at this. This is NASDAQ 100. Look at this. You say, Joe, you are talking too much. Okay, there it is. You see, I'm going to go to the daily chart and I'll show you. So this is my short-term equilibrium price level. That's the pink line there. Look what the NASDAQ line crashing down recently. Everybody crying, oh, what is he going? He's going to the long-term equilibrium price level right there. Two candlestick bar before you're running away. Now, the short-term equilibrium price level is here. The long-term and the short-term. Now, you want me to show you another one? Okay, all right, I'll show you. S&P 500. Is it making sense to you that it's a powerful tool? Here it is, gashing down. Where it stop? Again, same thing. You want me to show you another one? Okay, let me show you another one. Dow Jones. Well, it's the long-term equilibrium price. No, hold on. I'm talking about Dow Jones. Okay, I'm getting a little bit excited. All right, here it is. You see Dow Jones Index, long-term equilibrium price. Today, this is a nice setup. Breaks a ball. Now this will close. On Monday or Tuesday, we must watch Dow Jones here. It will be nicer to test. You remember what I said to you? Try to test a little bit below before going back up. All right. So you see now. So this is what we are talking about. Now we come back again to our stock that we are talking about now. Are you getting the message? Okay, getting the message now. You get it now. So all I want you to remember in this tutorial, you see, Joe, you are talking too long. A trend has started from one point. Trend is completed. Correction brings the price back below the starting point of a trend. It's critical for traders to know where the trend did start. Earlier way trader, understand that. Beginning on the first where they know it. Yeah, you want to draw a line there. If it goes below that level, start turning around like it did here. The first equilibrium price level that we see in that zone, we cannot ignore them. They become very, very interesting, and we can perform wonders with that. Not only that, if the price starts running away from those two equilibrium price level, we can just measure the width of the first those two key level and keep projecting it, keep projecting it. It's like we are creating a new copy of the original key level, original equilibrium price level. And then we are just looking for trading setup on there. Okay, those key level. Okay, it makes sense. Play with it. Use a demo account. Okay, and especially if you are, I'm thinking I will be doing something about the equilibrium price level. All right, I'm talking about it more and more. What I'm doing, I want traders to see it. Is that something you consider to use, or will you pay for it if you are not TST trader? That is the question. All right. So if you come out with something that is working, you want to do some experiment with it. That's why I'm doing a kind of expose, presenting it to you now, so you can think of it and see. So it's a tool that can help a technical trader that is a bit lazy to perform a fundamental analysis. So he or she can look for trading setup around those equilibrium price level. Okay, so the reason how did I get to the equilibrium price? So there's a phenomenon. This is very important. See, if you ask that question, ask a very important. Say, Joe, how do you get to that? The whole thing has started from the point that there is what we call the return to the means. So I deviate from its fair value, it will try to come back. Deviation between exaggeration. A stock fair value can be $5, but it can go up to $25. It's a deviation from its true fair value. At one point, the price will pull back to $5 zone to retest it, sweet spot zone, and then it will continue to go up. Another deviation. But there is something. Then I ask the question: do we have one? You get a story now. Do you have only one mean? Which mean should we use? So we use moving averages also. Moving average 50, moving average 100, moving average 200. Those are mean. So price deviate from 50, go back to 50, bounce up a bit, come back to 100. Again, goes below 100, go to 200, and so on and so on. We see all the time, okay? So return to the mean is going on all the time. So we are using moving averages as a mean. Price can also deviate from a trend line. Sometimes the price can deviate from a dynamic trend line. So you see, so there are traders, all traders are using, they understand. So when we talk about a return to the mean, all traders will say, yes, I know what it means. So which is the exact mean we should use? What is the mean of the mean that one must use? So what I've discovered is that the price going up, okay, does not have one mean. It have many means. So the financial instrument, you see sometime, okay, maybe going up, but each short-term and long-term equilibrium price level will be below. So there is a deviation from those equilibrium price level. What will happen if we do not have new equilibrium price level? Well, the price has a high chance to return to the old equilibrium price level. So I cannot go deeper into this, otherwise I will reveal the formula to you. So the price is creating. So some stocks that are very bullish, you see they will create equilibrium price level after equilibrium price level. But there is a period that they took. They take a period to create it. Now, if there is no new equilibrium price level after that period or those time lengths, all right, the price will return to the old equilibrium price level. We'll try to retest it. We see it constantly happening all the time. Now, sometimes the price may continue to go up, so you will see the price go away from it, stay there for too long. We say, what's going on? Then we have a new equilibrium price level. So we're now referring to those ones. And, those equilibrium price levels are also creating trading zone. Above, bullish, bearish, below, and so on and so on. So it's a powerful tool that a long-term investor should consider to use to understand. So you calculate the book value, you calculate all the blah, blah, blah. But here it is at the equilibrium price level, as I show you already, for all the major stock indices, all right? I am the only one, all right? That's what I say all the time, okay? I am the only one, and I'm very proud of it, to know the formula to calculate the short-term and the long-term equilibrium price level precisely. Look at that. Okay, this is the Dow Jones Index. So this will conclude our discussion today about Eldorado Gold Stock. Proprietary gold stock trader uses proprietary equilibrium price level, the short-term and the long-term equilibrium price level. The financial instrument that we are analyzing today is Eldorado Gold Corporation, EPIC EGO, Eco Golf Oscar. The long-term equilibrium price level for this gold stock is at $5.49. The short-term equilibrium price level is at $4.08. The stock went back below the starting point of the prior trend. Now, the first two equilibrium price level that we have are those one. It becomes a very interesting stock for us. One must perform fundamental analysis and look for trading setup on the edge of the equilibrium price level. If the price continues to go far away from the two equilibrium price level, one will measure the distance between the two equilibrium price level and project in the direction of the price to create a kind of a duplicate of the original, okay, equilibrium price level. Therefore, one can look for high probability trading setup on or near one of those key levels. As always, when one learns something new for the first time, it is always recommendable that one uses a demo account, practice until one masters it. Okay, very, very important. All right. So if this video has been truly useful to you, please let us know, please, by giving us thumbs up, please. You say, George, well, this is another mambo jumbo, same story, blah, blah, blah. Be free to mark it down. But if you say, George, I'm very impressed for the first time, okay, feel free to help us by sharing it on the social media. All right? I really appreciate it when traders shares our video on the social media. Subscribe to our YouTube channel. Our YouTube channel is Day Pro Traders. Day Pro Traders. Click on the notification bell. So anytime we record a new video, you will be the first person to be notified. All right, so this will conclude our discussion today about Eldorado Gold Stock. Proprietary gold stock trader uses a proprietary equilibrium price level. Until the next time, enjoy yourself and be very happy. We are the TSTW XYS008 traders. The financial instrument that we are analyzing today is Eldorado Gold Corporation. Have you ever traded Eldorado Gold? Are you interested in gold stocks? Okay, let us know in the comment section. Happy trading to you all.